don't want to lose profits. But after we have seen the stocks put in the poorest quarter that they have had in quite some time, I think going back to 2008, the question is, do you want to stay short? What's your long-term bias about this whole move, and do you want to ride it through? So that would be one possibility that you could do. You could stay short. Now, the second thing you could do, as we were talking about when we analyzed the corn market, is that you could take profits. You've had a nice run. Never want to, kick any profits in the teeth. You want to take them if you can get it. So you could potentially take profits and, just as an arbitrary number, I don't know what it is that might do it for you, but it might be something that you said, okay, to make it a nice round number, somewhere around 1019, 1009, whatever would give you 80 or 90 points profit. That would have been possible to take on in today's trading session when the market moved on lower. So you would have had, 4,000 something, $5,000 in profit. It's the thing that you have to consider. You don't want to see it evaporate by a surprise in the employment numbers. The other thing you could do, as I mentioned with soybeans, is you could buy a call. There are all kinds of levels of call, all kinds of ways that you can use options to trade. But for example, in this particular case, this particular day, if you wanted to buy a call, the SPX July 1025 at the money call was priced at, you could buy it at about 25 points, something like that. There is somewhat of a range, a spread between the bid-ask spread here, and it's bigger than you want to bear, but it is a possibility. It expires in 14 days. You may want to go out further, assuming that maybe the market will bounce up and get you. But what you're essentially talking about here is you're not talking about going long. You're talking about you have a short position and you're just buying some insurance against that possibility. It's kind of like buying fire insurance. You don't expect the house to burn down, but in case it does, you want to be protected. So you could potentially do that. In this case, if you were to buy an SPX call at 1025 call, it would be around $1,250. Now that's only for a very short-term 14-day protection. You could also take a July 1050 call, and that would be like around 14 points or around $700. So a lot of ways to use options that you potentially could use to protect yourself in a key report if you have a position that you do not want to give up because you think long-term that is the correct position. That's the way the market's heading. You just don't want to give up on what you have going for you at that particular moment. Now, just to kind of wrap up, just to talk about the key reports in general as to how to trade them and what to look for and whether, to jump into the market, prepare to jump into the market. Once that report out, once the market, you're going to see some jumps in the market, some gaps in the market that are going to be too far, too big a stretch for you to be able to trade. So you need to kind of know what our trade expecting. You can read about almost every major report will have analysts give their opinions and expectations. They have your own based on the conditions, depending on the market, depending on what you are. The next thing, once you have the expectations in hand of the traders, how are those expectations reflected on the price chart going into the report? Have they already run the price down or up or whichever the case may be going into the market for a shift in values, and is there a potential surprise that is possible? Where are the surprises? When the market is going down, it was now, and the stocks would be on the upside, a breakout to the upside. So you kind of have to always keep that in, protect yourself against that surprise. Then you get the numbers may not necessarily indicate what traders are doing. You have to fit them into some kind of a historical context. Where do they fit? How do they compare with that, you have to figure out, well, how do traders interpret that number? Sometimes they get a number on the surface, it's already market, and so they get a report that's maybe not a very good, so they just move on and you know, with it back up information. That's, you know, depending on how the information will kind of be judged by what the indicators show on the chart, by following what the momentum of the market is and what is going on, by reading the clues that you can get from the indicators. That's exactly what all those fundamental numbers mean. Very difficult to be a trader who can trade on the basis of you know, looking at the reports to put 2 and 2 together, and or 2 and 6 and 2 and 4 and whatever it is. But it's very difficult to trade some of those numbers unless you're a really into the market, have some real fundamental insight. That covers pretty much the reports. I picked them. I have to confess that when I picked that indicators would show that, like an example of corn, to indicate that traders already had positioned themselves based on the indicators, and that they would be short. That's where the surprise came, and that's where you'd have to have protection against that. If you have other questions, if I can, you see the numbers. If their question is about Vantage Point, what it can object information on your screen, get more information than you from them, but I would try to answer any questions if you have about an individual market or about a strategy. Just to let you know also, we are doing a series of webinars, or webinars on the TraderPlanet.com. They're in the archives there. We have other webinars planned for in the series of webinars, and some of the strategies that we use on some of the other webinars. We invite you to it. So, okay, if there are no questions, then I would say that I thank you for attending this webinar, and I look forward to it. Now I'm going to turn this back over to Darrell, and she can close out.
Thank you, Darrell. The recording for this webcast will be posted on Trader Planet later this afternoon, and we've made arrangements to email the link to everyone who is registered for this event. If you are interested in seeking further information on the software that Darrell has featured in this presentation, just select the Click Here link on this final slide. We'll place a request with our friends at Market Technologies for free market forecasts and additional information on the Vantage Point intermarket analysis software. This concludes today's presentation. Thank you for attending, and all of us here at Trader Planet wish you a pleasant evening.